everyone, it's Konrad Bobilak here, CEO of 21st Century Property Direct. I've made this very short video for you today to watch to go through one of the most fundamental things you can understand as a property investor, which is property cycles, timing of the market, and when you should be buying properties, and then when you should be reevaluating your property portfolio. And that's a very important thing. You know, people always say it's not so much the time in the market, it's the timing of the market. I think money is made both on the way in and obviously over a long period of time, especially with buy and hold investors. At the end of this video also, I'm going to give you an amazing gift worth thousands of dollars. So it's worth your while to watch the video to its very end. Now, for those of you who have seen me speak before, you know I've got a very extensive background. I'm a real estate agent, I'm a registered qualified mortgage broker. I've also got a background in financial planning. More importantly, I'm a property investor and I've been buying properties for over a decade now. And I've had the privilege of investing through 2 property cycles. So a lot of the things that are happening now in the market, really to me and people like myself, is virtually nothing new. But for a lot of new people entering the property market, there could be a lot of confusion out there in terms of should I be buying property right now? Is it a good time to buy? Not a good time to buy? And I want to go through and basically just give you a very basic understanding of property cycles in Australia and when it's a good time to buy and when it's not a good time to buy. So what's the state of the Australian property market? Well, it's interesting, in the last 4 years, a lot of academics have been saying that the end is near, the property market's going to crash. We've seen it during the GFC, we've seen it during the Euro debt crisis. Apparently, I remember when iron ore dropped down to $87 US per tonne, and they were saying this is the end of China's growth and the end of the mining sector and the end of everything's going to crash basically. And obviously nothing's happened. You know, the property market is definitely flat at the moment around major capital cities, but really there's been no crash in the market. Melbourne, Sydney and Brisbane are doing quite well, and I'm seeing a lot of really good opportunities at the moment to buy and negotiate. But once again, I always say to everyone, the risk is always with you as the investor, not with the market. So your lack of education, your lack of awareness, or the abundance of awareness that you have will create your opportunities. So the property market bubble really never happened. If you look at this chart right now, you can see the GFC came and went, and literally in Melbourne especially, the market really didn't do anything. There was no crash. We definitely flatlined for 6 months, and then the market went back up. In fact, our median price peaked in December 2010 at $601,000, which is quite interesting. But definitely at the moment, in Australia, there's a lot of negative consumer sentiment out there, which I actually love because I know at the moment, sales are down, auction clearance rates are down, and developers are desperate. And this is a really good time to negotiate and get deals and bargains. So let's talk about property cycles, and a lot of people don't understand that the property cycles in Australia are very predictable, and the timing is a critical element when it comes to making money in property. As you can see there are 4 distinctive segments to the property market, and literally it's a property clock. You've got 12 o'clock, 3 o'clock, 6 o'clock and 9 o'clock. The boom or the top of the market is around here. In Melbourne, this was 2004, where property shot up very quickly. At the moment, we're at the bottom of the market, where we've got clearance rates of around 60% in Melbourne, but more importantly, in a lot of established suburbs, inner city suburbs, listings are down by a third. It's in some suburbs there's virtually no houses on the market. There's 10 or 15 houses listed on realestate.com. So this is at the bottom of the cycle, and it's just a matter of time now before we start moving up and going around the cycle again. One of the key fundamentals to understand about property markets and auction clearance rates, especially in Melbourne and Sydney, because majority of our properties are sold at auction, is when do you buy property and when do you revalue your property? So if you look at the market basically can go up a lot and can go down a lot, which I've never seen, but it can definitely go sideways, which we're experiencing now. If you're looking at Melbourne auction clearance rates, you can have clearance rates of 100%, which I've never seen before. I've seen as high as 97%. You've got 75%, 50%, 25% and then 0, which basically means that we've got hundreds of auctions and nothing selling. At the moment, if you look at Melbourne property market, we're kind of here. We're at the 50%, 60% mark, which means half of the properties at auctions are getting passed in, half are getting sold. This is a really good time to buy property. And let me give you the 2 key factors when you should be making offers on property. The best time to make an offer on property is after the auction has been passed in. The agents haven't sold the property. They hate that property now. Okay, I can tell you. They've been marketing that house for 6 to 8 weeks. They haven't made any commissions. The best time to make offers is just after the property has been passed in. The second best time to make an offer is on Monday morning when they're back in the office all depressed because they've made no money. And that's when you can make ridiculous offers and see if you can pick up those properties at a bargain. The worst time you can ever buy property is at the peak of the market when you have clearance rates of 85% plus, which is where majority of the public get in. This is where you'll be overpaying for property, and this is not a good time to buy for property. So one of the fundamental things about becoming successful is to look at what successful investors are doing and model that behaviour. So if you look at what I've been doing over the last 10, 15 years, is I've been buying property at the lowest point in the market, and when the market booms, I spend the majority of my time revaluating my properties because I've got all these high references in the market and locking in my lines of credit at the highest possible point. And that's the fundamental things that you do. So at the top of the market, refinance, get your lines of credit up as high as you can. At the bottom of the market, make ridiculous offers. Negotiate hard because that's really the time to buy. So that's the property cycle. If you look at this chart right now, in the industry, everyone is saying that 2013 is going to be a very flat year for property. For me as an investor, it's a very good thing because fundamentals just never change. So what are investors doing right now? Investors are going in hard, negotiating because they understand how to do unbiased due diligence and the fundamentals just don't change. Warren Buffett said it best when he said, be fearful when others are greedy, be greedy when others are fearful. Counter-cyclical investing. That's the number one principle behind making money in this market. So the question is always, well, that's fine, Konrad, you're teaching all this stuff, but what did you do in 2012 when the market was completely flat? Did you buy a property? Well, yes, I did. Let me show you exactly what I bought in 2012. So this is the first property that I've purchased in number 1 Mackie Road in Bentley East, which was an apartment for $555,000. Now, Bentley East in Melbourne is the suburb that really in 2004, the last property cycle, didn't do much. It got kind of overlooked, and I believe this is one of the key areas that's going to boom in the next property cycle. This is the apartment there, and you can see that it's got a massive courtyard. In fact, the courtyard's bigger than the apartments on the ground floor. So that's one of the properties that I've purchased in 2012. This is another property that I've purchased in 2012, which was a townhouse in a suburb called Bond Beach for $525,000, which settled 2 weeks ago. This was an off-the-plan purchase. About 60 metres from the beach, one of the best beaches in Melbourne, I would say, which is Bond Beach. Once again, the land component, that townhouse has a land component of 180 square metres, which is huge. Another 2 apartments that I've purchased in my favourite area, which is St Kilda. So apartment 302 and 401, 18 Martin Street, $625,000 and $645,000, those 2 apartments. St Kilda is one of these iconic areas in Melbourne, where it just always goes up. For the last 5 years, St Kilda has had an increase in capital growth on apartments of 56%, which is incredible. Even in 2012, it did double digits in capital growth, which is quite unbelievable. Once again, apartments in St Kilda, you can see right there, the balconies on these 2 apartments are 24 square metres. And this is really what St Kilda gets valued by, is the size of the balconies and bathrooms. That's what's in demand in St Kilda. This is another property that I purchased, which is lot 168 in Kavanagh Street in Cheltenham for $635,000. It's a townhouse off the plan. And once again, 3-bedroom, double-storey townhouse, 800 metres from the biggest shopping centre in Australia, which is Southland Shopping Centre. Also, I set up my self-managed super fund, and I've purchased unit 1 of 222 Kingsway in South Melbourne for $250,000. Property's probably worth $350,000. Once again, got a massive discount, took advantage of the conditions. Property was on the market for 12 months, unsold, and I negotiated really hard. There's a picture of the property. It's actually the building we're in right now, except it's on the ground floor. And you can see there, it's a little office, commercial property, cash flow neutral. I'll get 10% per year on that property, better than fund managers losing my money and charging me 4% per year for the privilege of losing my money. Surely I could do better with commercial property. And once again, if that's not enough, I'm doing a renovation on a property in Vermont that I've purchased for $550,000 and I'm doing that reno, which is $123,500. There's the property there, and eventually I'm going to subdivide that property and put a couple of houses, one in front, one behind. So 6 investment properties in 2012 with $3.2 million. So when I teach all this stuff, guys, I'm not just showing you theory that I've read in books. I'm talking about what I'm actually doing as an investor. So if you like that kind of information, if you want to learn more from people like myself who are successful property investors, what I want to do is personally invite you to spend 2 days with me in Melbourne. And I'm going to basically take my whole property portfolio apart. I'm going to show you exactly what I do. Now, these 2 days are quite amazing because during the 2 days, they're split up into 2 different things. Day 1, classroom environment, investor psychology, finance, structuring, buying in trusts, due diligence, cash flow analysis, all the numbers, all the formulas. Day 2, we're going to go out into the bus. This is only limited for 40 people at a time. We get a bus and I basically drive you around Melbourne and I'll take you to 6 projects. I'm actually going to go out with developers, with real estate agents. You get to do live due diligence on the ground, walk around on the streets of Melbourne and look at the research and the due diligence that I do as a property investor. If you're interstate, this is applicable in every major capital city in Australia because fundamentally, the due diligence that I do in Melbourne is the same that I will do in Sydney, Brisbane, wherever you are, in WA, in South Australia, in Tasmania, it's irrelevant. The fundamentals are always the same. So day 1, advanced property portfolio structuring. Day 2, the bus trip or the field trip. Amazing 2 days, you'll learn a lot. And if you attend, you're definitely going to get massive results if you take action. So all you got to do is click on the link below, check the dates, and I hope to see you there. Thank you.